Hello guys, it's Max here from Daily Market Movements, and in front of me is the gold over the US dollar chart. We've had some significant movements here in the gold markets on Friday, and that is partially due to the Jackson Hole conference we had with the Fed Chairman Jerome Powell speaking, and long story short, he told us what we already knew. He told us that there could be a tapering process which may commence as of October going into November time, and then once this tapering process has come to an end, the Fed will not raise interest rates. They will step back, assess how the economy is doing, and then from there, that's when they will decide when the interest rates will start to be hiked. But it's likely not to be next year. It's probably going into 2023, and even if it is next year, it will probably be right towards the end. But personally, I think it'll be the beginning of 2023. So markets cheered this. I think that many investors out there want the tapering process to begin, because quite frankly, the $120 billion which is being invested every single month is very unnecessary, especially when the economy is doing as well as it is. Currently there is a supply issue, not a demand issue. Consumers have plenty of money in their pockets and they are purchasing like they've never purchased before, but it's just the supply just can't keep up. Every day you're seeing chip shortages, you're seeing employee shortages, you're seeing wood shortages, metal shortages, steel shortages. There's plenty of shortages. Like here in the UK, for example, there's a shortage of bloody milkshakes at McDonald's, for heaven's sake, and that's because there's a shortage of lorry drivers. There's shortages everywhere, and that's what is causing inflation. But the interest rates aren't going to be hiked until earliest of end of next year. So the markets have cheered that. The gold markets have shot up, but that doesn't change the medium to long term perspective from where I'm standing. Okay, I do not like gold. Reason being is because medium to long term I'm bearish, so I don't really want to be buying short term this gold market, because from my experience trading, psychologically I really find it hard to be a short term buyer of a specific asset if I know medium to long term I think it's going to plummet. And I do genuinely think going into next year we will have a horrendous year for the gold markets, and I see it trading back down towards at least a 1500 level. So I'm going to stay away on the sidelines. Unfortunately, my buy position that I bought at 1800, which was in profit for the majority of the time, has just triggered its stop loss up at 1815. But I'm not going to buy the gold markets here. I think that the gains here are capped up at 1830. So we may see a shoot up towards 1830 now. Whether we break above there is We'll soon find out going into next week. I think if we do break above 1830, we go up towards 1900. But personally, I think it's only a matter of time until we break back below the 50 to 200-day EMA. Once all this news has worn off, what we've heard, what we've heard from the conference this afternoon, and I think that we will return back down, trading below within the 700s. And we will go and retarget at 1680, which has offered us plenty of support. So I wouldn't be too bullish here on the gold markets. Yes, it's been a great day today for the gold bulls, but I think it's very short-lived.